Let's get some insights in the news shaping the markets. For that, we welcome in Jay Woods, Chief of Global Strategist, Freedom Capital Markets. Good to see you, Jay.
Good to be here.
So what do you think? I mean, we've had 10 of 11 weeks higher. You have some breaking news this morning. You have the Fed's Christopher Waller just saying that they're going to move carefully with the rates, that the job strength, the market labor, that labor force may come in a little bit, just that they should be really methodical. He's really just putting out a sense of caution.
I think that's a good message. I think we need to be a little bit cautious, and we have to put it in perspective. We're up 10 of 11 weeks. The first week kind of caught everybody off guard, and I don't know why. We had such a great run to end 2023. We've pulled back, and the pullback isn't too dramatic. And I look at the S&P 500 rallying back a little bit. We are just off all-time highs. We closed at an all-time weekly high. So we are digesting gains. As far as the Fed goes, yeah, I was never in the camp we're going to have 6 cuts. I thought that was excessive. I don't know where those numbers came from. Yes, I think there will be cuts later on in the year, possibly as early as March. But I like that they're being a little tepid in their guidance now. And that's kind of cooling the market, but it's not causing it to sell off, and I take that as a positive.
Right. What do you make of all the bank earnings that we've gotten in thus far?
Well, the bank...
do you want to focus on one, or...
Oh, we can go wherever you like.
Well, is there one that sort of stood out to you, or is there something that you're learning as a theme?
Well, I'm more focused on listening to the regional banks. PNC Bank is the second largest regional. They reported this morning. Their conference call is going on right now, 11 o'clock. That always drove me crazy. Why not have it before or after? But so I want to see what they're saying, because their loans, everyone knew the loans were going to be down because mortgage rates got so high. But the deposits were down. That was a little kind of unexpected, and they did miss, but I don't know how diluted those numbers were. So we'll learn more on the call today at 11, and I think there are 24 in total regional banks that report this week. The reason we focus on the regionals, that's what kind of held us back last year. They make up about 15% of the Russell, which has been the lagging index. So I want to see some guidance there. As far as the big banks, I like the price action we're seeing right now in Goldman Sachs. Goldman Sachs traded a little lower now, trading on the highs. A little optimism on that call about what is coming down the pipeline as far as IPOs, deals. That is the optimism I want to hear. Most of them have been a little cautious. Last Friday, when we had a lot of the bigs report, JP Morgan, great quarter, record profits, but it traded lower, but it made sense. The stock had been up so much. For it to pause, that's okay. It's still trading just off all-time highs, and it's starting to rebound. So I didn't think they were going to run away if they did report good earnings, but seeing the price action that they didn't take a leg lower, to me is positive. It's very constructive.
Tell me a little bit about the S&P 500. I mean, you're watching some very key levels, and we're not that far away from records, right?
Yeah, I mean, once again, it's perspective. If you go back 2 years, we're right where we were at January 2022. Made the full roundabout, now we're pausing. We saw in a lot of the big stocks, those Magnificent Seven, that, NVIDIA being the poster child, came back to its old highs and then broke out. Can the S&P 500 break out above that? What will the catalyst be? Well, we're in earnings season, so we're hoping earnings can be the big catalyst that drives us higher. You're looking at some of the Magnificent Seven. We're seeing a little bit of a change of story. There are 5 that are going higher, 2 that are lagging, Apple and now Tesla, which looks a little scary if you look at that chart. And some of the news today was had some Tesla bulls a little skittish about what Elon Musk's direction is. But overall, the stocks that led last year to begin the year are starting to lead again, and I think that's positive. Now we just need that earnings cycle to take us and break us out to all-time highs. It may not be until the end of Q1 and that March Fed meeting. We'll see what the catalyst will be, but it's probably going to be the Fed.
What levels are you watching? We're at 47.70 today.
Yeah, well, on a pullback, I'm looking at 4,700. At an all-time pullback would be 4,600. That's a 5% retracement. We usually get 3 on average. We had 3 last year. So if we were to retrace 5% given the run, that would be the level I would watch. But we didn't even retrace that much. I like 47.96. We want to close above that. 48.18, the old intraday high. I don't know if that's important to many people, but I would like to see us follow the leaders in the NASDAQ 100 and the other indexes that have been making new highs, including the Dow.
And the 47.96, what does that tell you?
Well, I mean, maybe we get hats. It is an area of resistance, like 4,800, just to keep it round.
Yeah.
We just have not been able to close above it. And when we break out to new levels, I like to see 3 days of closing highs above that to give a little bit more of a confirmation. But given how overbought the index was, this pullback is natural, it's normal, and it's not as severe as I thought it could have been. And now that we're getting into earnings season, everyone's beating. Yes, the bar is a little lower. We know that. But
Right.
I think once we get into tech earnings and then Fed speak after the January 30th press conference, that's when things can really get interesting.
Are we concerned about oil at all? I mean, it's really has pulled back. I know it was running up, looking, eyeing 80 at one point, and now look, we're at $72.
Yeah, it is amazing. I thought there would be a little bit more of a knee-jerk reaction given the trouble in the Gulf.
Right.
But no, 75 has been a level of resistance in oil. It's gotten there, it's tested it, it's failed. So if you're, bearish on oil, this is good news that 75 cannot be breached every time it tests, it fails. So if things calm down in the Gulf, I think oil can trend a little lower, and we'll be seeing mid-60 oil in no time.
Yeah, because I think some people are concerned about what could happen to gasoline prices. I mean, also we'll have maybe higher prices if a lot of these ships get rerouted, whether it's in the Red Sea or in other areas that we're seeing drought, for example. Good to see you,
Yeah,
Jay
always good to
Woods.
see you.
Thank you. Freedom Capital Markets.